Hello and welcome everybody. Welcome to the 11th installment of our Mountain West webinar Masters of 504 Lending series. Today, we're going to be learning about servicing. This is like the moment where Dorothy meets the Wizard of Oz. It's everyone you've always imagined and hoped would be behind the curtain, and that is the servicing department. And it's going to give you goosebumps. So we're going to begin with Holly Boss as our servicing manager. She'll lead it off and you'll get to meet each member of the team, learn about what they do. As a loan officer, we always get asked, different questions about the loan once it's, down the line, when there's been ownership changes or there need to be changes to the loan. And we just refer you to the servicing department as a whole. So now you get to see each member of the department and what they specialize in. Before we begin, on the reminder email you received, there's a part for a survey. So we're going to continue on this webinar series through this next year. We'd like to get into more specific topics and concepts. And so if there is anything you'd love to have a specific webinar on, a specific topic, please fill out that survey. We'd love to hear from you, and would love to cater it to anything that all of you are interested in. Well, I do not want to take away any of the anticipation, but let's just say our servicing department has a lot of loans. I'll let them give you the numbers, but now you get to hear everything that goes into their daily lives, all the loans they work with through the year, and let's just say it's a lot. And so I'd like to turn it over to Holly Boss. She'll give you the overview and lead you through the webinar series. Holly, it's all yours.
Okay. Hey, thank you, Jed. I am Holly Boss, and we are excited that you're here and joining us because we really appreciate you. We couldn't do these loans without you. So we're grateful for our partners in lending. But like Jed said, a lot of people just feel like once the loan funds, it just goes into la la land, but it really comes to us. We in servicing get the loans. So we thought today we'd kind of talk about how our paths cross after the loans fund and when we might be interacting to try to help the borrower. So we wanted to do a joke because I know Jed always has these funny jokes or he says things about himself at the bottom of the slideshows, but we didn't know if what we'd say would be appropriate. So the only thing I was allowed to do is to make up names or say something about each person. So I have given everyone a nickname. So we have Judicious Jen, Likeable Lisa, we have Scrupulous Spencer, Harmonious Hans, Meticulous Marcy, and Ambitious Austin. And we're all your servicing team, so you can reach out to us with any questions or with anything that you might want to discuss with us that might help our borrowers. So today we're just going to be talking about funding, compliance, servicing actions, loan prepayments, and liquidations. Austin couldn't be here today, but Austin is the one that would be telling you about, he will be sending all of our borrowers, when one of our joint borrower loans goes to fund, he will be copying all the bankers on the email. He calls the borrower a week before it funds, and it always funds every second Wednesday of the full week. And he will send out what we call a funding packet. And that funding packet will have the effective rate, it has their amortization schedule, and we'll have all the links for all the signed documents, and we'll be copying the borrowers on that. So if you have any questions, you can always reach out to Austin on that one.
Hi, everybody. My name is Spencer Allen. I've been working at Mountain West for 2.5 wonderful years. And about 6 or 7 months ago, I was assigned to send out our post-funding letter. It's pretty important to us. So we wanted to take a moment to kind of explain to you guys why we do it, why it's so important. And it really boils down to the SBA requires that we have documentation that shows correct application of loan proceeds and perfected lien position. It's really important come audit time. There is a rumor going around that Holly might have a quiz at the end of this, so I'm going to repeat that very slowly. The SBA requires that Mountain West have documentation that shows correct application of loan proceeds and perfected lien position. So every month when our loans fund on that same day, I'm going to send out a letter to all of our lending partners for each loan. I sent out a whole bunch yesterday. We're really asking for 3 documents. One is a signed copy of the ledger. People always ask me who needs to sign it. I just tell whoever I'm talking to sign it, just as long as it's signed is what's important to us. The other document, if your group funded 2 separate loans for the borrower, we're going to need a copy of the note stamped paid in full. If you funded one large loan for the borrower, we need a copy of the modification agreement, the fully executed modification agreement. We're also going to need a copy of the reconveyance of trust deed. If your group doesn't modify your trust deed, just send us an email and I can put that in the file. But yeah, this is an example of the letter. If you ever have any questions, reach out and I'll help you out the best I can. I also oversee Mountain West's collection efforts on our loans. That entails helping borrowers with their automatic payments. Typically, when an automatic payment doesn't go through, the borrower is going to reach out to the bank or the credit union that they're working with. That's who they have the relationship with. If you get someone reaching out to you saying, hey, something's up with my SBA loan payment, feel free to send them to me. There's my email. It's sallen. A lot of these get sent to Spencer Davis. That's who you guys work with. So just make sure you get my last name in there and I'll help them out the best I can.
I am Lisa Snyder, and I have been with Mountain West for 13 years. One of my responsibilities is to check the compliance and risk rate the loans each year. If I'm doing a compliance checklist, what I include are the monthly payments. I make sure that everything is current. I want to double check the annual property taxes to make sure they're paid. We collect the annual tax returns and we collect those on the operating company. We also look at proof of insurance, and we want to make sure that all of their insurance is correct. The operating company needs to be in the building. The collateral must be occupied throughout the life. The collateral must be owner occupied throughout the life of the loan. And then we also check the guarantees on the loan. We want, as we get tax returns, we double check and make sure all of the guarantees that we have on our list of loans are still on the loan. Today, we are also going to be talking about a bunch of different kinds of servicing actions, and I am the gatekeeper for all of those servicing actions. I will review the compliance for each of the loans before we send out an initial checklist. On that checklist, we will give you all the information we need and the documents we need in order to complete these servicing actions. And then once we've received all the information on that checklist, I will forward this information on to the person that will be processing the loan request.
So my name is Hans. I do the insurance portion of the compliance at Mountain West. So insurance is one of the most difficult things. It's like laundry, it never goes away. But here at Mountain West, we service over 1,700 loans, which equals about over 4,000 insurance records that we have to audit and make sure that are current. So, and that ranges from property, hazard insurance, business personal property, workman's comp, life insurance, liquor liability. Those are not, and a note, those are not all required for every single loan. They're loan specific. Each loan will be a little bit different, but we do monitor all those different types of insurances. So, we always try to reach out to the borrower to make sure we stay up and current on those. But in case we can't hear from a borrower, we may be reaching out to our lender partners to see if they can help us out on obtaining that or giving us a fresh lead on where to look. Another thing that I'm over is just compliance on the property tax portion of things. One thing that we like to do is send out reminder letters to our borrowers to make sure that they are current on their property taxes. This is something that we like to keep current as much as possible. And just to clarify a myth that has been going around, SBA does not need any sort of subordination or anything to do in a protective advancement of funds for saving a collateral into going to property tax sale. We do not need to do any subordination or anything. The bank is more than capable of advancing those funds without any SBA subordination or paperwork. So that is a common myth we want to get kind of cleared up for you guys. So if anything would be going up to tax sale, you'll definitely be hearing from me a little bit to make sure that we can save that. So yeah.
So I'm Marcy. I've been with Mountain West for 24 years, and I'll be talking about the servicing action that we call a unilateral subordination, but it's when you want to do a straight refinance and have us subordinate. As with all servicing actions, initially we'll need our borrower's written authorization in order to start the process. And then Lisa talked about the checklist of items we need. So with this straight refinance, what the SBA will subordinate to is the existing lending institution's balance, the current month of unpaid interest, origination fee of up to 1%, and then reasonable closing costs. So the SBA will not subordinate to prepayment penalties. And just so you know, an appraisal is not required by us for this type of action.
So subordination for improvement on collateral. We used to call this a cash out subordination, but people would get a little too excited and get the wrong idea about what's going on. So this is the new jargon we've got moving forward. Say your borrower wants to take out a loan or an additional loan or refinance that existing loan and increase that loan amount. The SBA is willing to consider subordinating its lien position if and only if those funds are going to go towards improving the project property, increasing its value. For this to happen, the borrower must be in good standing with the SBA. This isn't just limited to being current on their SBA loan. They're going to need to be up to date on their insurance. So if the borrower doesn't know who Hans is, that might be a problem. They also need to be current on their property taxes, can't have any technical defaults, which Jen is going to talk about here in a little bit, what that really means. The biggest obstacle that we typically run into is that the SBA won't consider subordinating its lien position unless it has been 18 months since that loan has funded. The actual rule is that 18 consecutive payments have been made, but we wanted you to be aware of that. Once we submit this subordination request, the SBA promises to get back to us within 3 weeks, and there's really nothing we can do to expedite that process. So it's kind of, we need to be aware of the time frame. I used to broker commercial real estate, and we had a saying that time kills all deals. It's the exact opposite with servicing actions. The sooner you get us involved and the more time you can give us, the higher the chances are that we'll have a successful transaction process. I don't know how to word that. Sorry, I didn't. But the more likely we'll be to be successful. I also process collateral releases. The SBA is very cautious about releasing collateral. They are willing to consider it, but the expectation is that all net proceeds from the sale of that collateral or the value of that collateral be paid down on the bank loan that's ahead of the SBA in lien position. Most of these that we deal with are eminent domain situations where UDOT's expanding the road, but all of them are unique. So definitely give us a call and we'll walk through it, but just know that net proceeds need to be to or need to be used to pay down the bank loan.
Good morning. I'm Jen Schmitz. I've been with Mountain West for 26 years, and I've spent the last 12 of those in servicing. I will be talking to you today about the various servicing actions that I will be helping you and borrowers with. So the first one is the entity changes and issues that arise. As we've mentioned previously, there's a lot of compliance that we have to check annually on the borrowers. They do require us to monitor the real estate holding company, which is also our borrowing entity, and the operating company for ownership changes. All 20% owners of either of those companies is required to guarantee the loan as long as it is in our portfolio. So that's something important to remember. And what happens is, let's say we have an owner who owns 20% or more of the operating company, but not the real estate holding company, and they don't want to guarantee that loan. Unfortunately, SBA considers them to have a technical default at that point. The technical default does prevent us from being able to process any kind of servicing request until that technical default is resolved, and it precludes the borrower from getting any other new SBA 504 loans. So like we've said, we all really know what we're doing, so reach out to us with any specific questions you have on any of these actions, and we'll be happy to walk you through. The other one that I'm involved with is any kind of guarantor change. So again, as mentioned previously, the loan must be seasoned and it must be in good standing. In order to release a guarantor, SBA requires that we either have a substitution of a guarantor or consideration to do that. Substitution is defined as bringing on another individual to replace the one asking to be released, and they must have either equal or better financial wherewithal than the borrower requesting to be released. And consideration is the tricky one. It is considered as pay down of that loan that's in first position. The SBA requires that because they are junior to that lender, and so that's their way to mitigate risk of releasing a guarantor. Regarding the consideration, it's on a case-by-case basis. We have to look at the package and everything involved. So it can't be a minimal amount. We get requests for, like, if I pay down $1,000, will that work? And unfortunately, it usually requires more than that. And we don't have a specific percentage we can give you. But again, reach out to us and we'll talk about that individual case. The other one that we're going to talk about is assumptions. We're getting a lot of requests as interest rates start to creep up, and we had all of those historical low rates. So people say, is my SBA loan assumable? And the answer is yes, it is assumable, but there are conditions that SBA places on the ability to assume that loan. So again, as mentioned like 10 times before, it must be seasoned and otherwise in good standing. And then some important things to talk about regarding an assumption. The borrower must be under contract on the collateral. So we can't have someone come to us and say, hey, I'm thinking about doing this. Could you pre-qualify that borrower? It takes a lot of work. And so they do have to already be under contract with that person before we can review the package. We do need a package from both parties. So we will need one from the new buyer and also one from our borrower as the seller. A big thing that SBA requires is that potential buyer must own a business and intend to operate out of the collateral. SBA will not do an assumption for an investor type property. And similar to originating a new loan, it is an easier process, but they must meet SBA requirements and qualify similar to the way they would with a new one. If that first lender that's out ahead of us, if their loan is not able to be assumed, then we can do a subordination for a new third-party lender, but it is only for the amount that is currently owed. So we cannot revert to like the original authorization amount. Now, if they are doing improvements to the collateral, then we may be able to increase that amount ahead of us. One big thing and important point on assumptions, the existing borrower must remain obligated on that loan for an undetermined amount of time. We usually say it's a minimum of 1 year, with average being anywhere 2 to 5. And there is no automatic release of that borrower. So it's not like, okay, at 2 years, then they automatically get released. They will need to come back to us and we will review that and, look at if we can release them. There is a fee charged on the assumption. It is a 1% fee on the SBA loan balance. And I just want to make a note here that I have actually had SBA decline assumptions if our borrower is getting too much cash out of the transaction. So if we have an SBA loan of $1 million and let's say the borrower is netting $2 million, there's a chance SBA might not buy off on it because they might say that the borrower has the wherewithal to pay the loan off. So again, call me if you have any questions or if an assumption comes across your desk. Now we're talking about if a borrower gets into trouble. We can definitely process a deferment for them, but the big thing that is written in the SOP all over deferments is it has to be for a short-term problem. So as long as we know that it's a short-term problem, we can defer payments. SBA generally likes to have that borrower make some kind of partial payment during the deferment, just so that they keep in the habit of making those 2 payments, one to you as the lender and one to the SBA. And part of the reason for that is the way deferments are handled is that after that deferment period is over, the borrower then immediately begins resuming not only their monthly payment, but a catch-up piece. And that catch-up piece is determined as we take that deferred amount that was deferred and we spread it out over a catch-up period, which is usually 1 to 5 years. And so that way it kind of minimizes the amount they have to pay back. The goal of that is obviously we get them back to their original amortization schedule as if they'd never deferred to begin with. It's important to note we do have it where a borrower then needs to during their catch-up period, the borrower needs to refinance their loan that's out ahead of us, and we would need them to come current before we could look at doing that subordination for them. But there is no penalty charged to do that, and they can do that at any point in time.
Okay, so I handle the loan prepayments, and you can see right here it says timing matters, and timing does matter on these loans. What I'll need is our borrower's authorization again in order to release a prepayment estimate. And that estimate then remains in effect until final payoff information is released. Since the SBA loans are funded by a debenture that requires semi-annual interest payments, our borrowers are then subject to paying interest and fees through each one of his or her semi-annual dates. So regardless of what month they want to pay off, again, timing can be critical. These loans are always scheduled for the 3rd Thursday of each month, and they must be paid off on that date. So again, if you can contact me ahead of time, at least I ask for 2 to 3 weeks in advance to get everything in place and make sure that we give the best service that we can on payoffs. And another thing is 1 week prior to that 3rd Thursday, SBA will open the prepayment period and release then the final official payoff. And then I send that information, and then you have that 1 week window to wire the payoff. And again, it just says here, the payoff wire must be done by 3 p.m. on that Thursday. So.
Okay, and then we finally have the liquidations. We never ever want a borrower to need or end up in liquidation, but it does happen. So we do have a team here in liquidation. It's comprised of myself, Spencer Allen, and Holly Boss. So we kind of work on that. Our term is liquidations, but most lenders would refer to it as kind of their special asset department. So like I said, if we get into a situation where the borrower is experiencing a long-term issue, we will transfer the loan over to the liquidation team, and we can take steps to help them out, hopefully. One thing that's important to note is if a borrower misses 3 collective payments, so not 3 consecutive, but 3 collective. So we hope that they never have that payment from 3 years ago that's still hanging out there. But unfortunately, if they get to 3 payments total, we will have to move it over to our liquidation team and see what we can do. So also, of course, worst case, if we end up short sale situation or foreclosure by either you as the lender or us as representing the SBA, you would then work with us. So like I said, the good thing is you'll be working directly with us at Mountain West. We'll be the liaison between what's going on in SBA. So that's kind of its own separate thing. But again, if you have a situation that looks like it might be headed for liquidation or need long-term, please just reach out to any of us and we can help get the process going there.
And that's our presentation today. Does anyone have any questions? That's our servicing team and what we kind of thought where a lot of our paths cross when we're both trying to help the borrower with all these different things. But if there's any questions.
Holly, we do have a couple of questions. One of them is kind of a hypothetical. A borrower closed on a 504 loan. The first is from one of those predatory lenders that provides variable rate financing. The borrower now wants to refinance the first. The debenture will be funded within the last 18 months. Will the SBA still subordinate to the refi?
So is it before the 18 months? Is that the question? It's before the 18 months. We can try to get it if we can prove how much is helping the borrower. It's just hard to do that, but we will always try. So yes, always give us a call. We can see what we can do for that.
And then we have one more. If we are paying off a debenture, can we close prior to the 3rd Thursday and have the funds sit in escrow until the 3rd Thursday payoff date?
Yes, you can do that. That is correct. And just kind of keep Marcy in the loop. Marcy's great on keeping track of all of these. So you just want to keep her in the loop. But yeah, that's very doable. Is that all our questions?
That's all we have in the box.
Well, we have a question for you then, and this is going to be a question for Chocolate Cottage special. Lisa says this is the best toffee ever. So Lisa, on unlikable Lisa's word, this is the best toffee ever. So anyone that answers quickly to our question will have some toffee delivered to them. Why do we have to send out a request to the banker after the SBA loan funds asking for a copy of their ledger and either a modification of their trust deed or a reconveyance of their trust deed? Can anybody tell why we have to send that out to you? Olivia, does anyone know the answer?
I'm not seeing anything yet.
I guess we will have the toffee. Anyone want to take a guess? Okay, so that was the quiz that Spencer was trying to tell you to pay attention to, is that we just have to have documentation for our SBA audits. When these loans get audited, we have to have documentation that we are in the correct lien order, that we have to show that you applied the SBA funds to your loan, either if you had 2 loans or you had 1 loan, that you just applied it and that we are in the right lien order behind the right amount. So that's why we do it. Here's all of us. If you have any questions, please reach out to us. We really want to be good partners to you because we appreciate all you do for us. And that's our presentation. Olivia, do you have anything else?
Nope.
Okay. Thank you.
Thank you, everyone.